Third. We're back for the second trading day in a short week this week. And as we do every day, we zoom out to the monthly and we can see the monthly not really offering too much information, just trading inside the previous day's range. So one thing, we can see here, it did trade down to our equilibrium 68. No surprise there, right? That we knew that's where liquidity was at. It popped down there, kind of bounced. You can see it's actually trading below that level now, but they got the bounce late in the session from there yesterday. Switching over to the weekly, you can see we're developing a +4 week, so we get that cessation of one time framing that we talked about yesterday, right? We said the odds are really great. We do get that cessation of one time framing on the weekly, which is where we like to draw some of our conclusions from. Really is a bigger indicator of possible change in the market, and we're seeing that so far. And so with the market being at 63 here, this bar is actually going to be looking a little bit more like this now, to the downside, filled in, of course, but we're going to be getting a little bit of a negative look here to start the week with a developing -4, and below that previous +4 level indicates some opportunities here for that short side to get that continuation, right? And yesterday we had a very mechanical high, really indicating that buyers were super weak. They really just moved up, closed the gap, and then rolled right over back to the low. For those of you guys that caught that trade, I wasn't on the computer, but it was a really nice setup. I had a couple people text me about it. So congratulations. It was a really nice setup, and way to stay patient and wait for that thing to set up. Switching over here to the daily now, you can see we're one time framing down, right? First time that we've been doing that in a while. Since last time we were one time framing down was all the way back in October. One time framed up, we balanced for a little bit, then we one time framed up, then we got some liquidation, we one up, and then here we are now, one time framing down, 3 lower highs, 3 lower lows. Well, I guess 2 lower lows, but still get that one time framing here. Yesterday, a little bit of a divergent day, right? I'm mostly just chalking that up to they came down to the equilibrium. We knew there was going to be some liquidity there, and boom, they popped it up, or they just covered the position. The move was real late in the day, and we can look at it a little bit in closer detail when we get to the profile. But those are two kind of key things that we want to be carrying forward as the market rages on here. A little bit of a review from yesterday. Right, we kind of opened up, B period traded inside, C period took that low just by a couple ticks. We had talked about a couple of those shorts getting jammed up, and one key thing that we talked about yesterday, right, and we were kind of waiting for this setup, is we had seen the market kind of move down. C period took the low after being an inside bar, but then the market moved back into range, right? And when it had moved back into range, we were talking about, okay, well, if we see a POC shift up after it had already shifted down, that's kind of indicating that either buyers are stepping up or shorts are coming in to cover. And most likely we look towards to take that A high. And then basically, that's kind of what we got here. We got the D period moved up. We had the POC shift up. Then we had, obviously the POC shifted up again late in the day. But we took that A high, closed the gap, and then traded lower, right? So this is a key thing from when the market has to take care of old business or it can conduct some new business, right? We had all these people that were stuck long up here, needed to give them that opportunity to close, moved up, and what do they become? If you're a buyer up here and I give you an opportunity, right? So let's break this down even a little bit farther. If you buy right here at, let's say, 4,800, right? Um, Terrible drawings, but 4,800. And remember that each point is $50. So, and I drag the market all the way down, and let's just use the A low. So 47.75, right? Times it by 50. What do we get here? Per point. So you're looking at about 25 points. So 25 times 50 is a little bit, what is that? Oh, a little bit over 1,000 per contract that you're in, right? And you figure these people are in hundreds, if not thousands, of contracts. And so they're down quite a bit of cash. Well, a little bit later, I give you the opportunity to just close it for 5 times 50. What do you do? Well, you say, "Oh shit. Well, let me take advantage of that." That's a little bit of a fire sale. But in order to close that position, what do you become? And for answers here, a seller, right? And so you have to sell. And so not only was there already a seller in the market, but then old buyers are forced to sell, making the market heavy and dragging the market down to a new low on the day. So it's an important concept to understand when you're trading, and that should be something that you're kind of developing over time, but something that you are understanding as the market is doing this. And it's a longer term development, right? It's happening throughout the day time frame. So it didn't just happen in A period or in B period. It happened throughout the profile, right? And then G period gave them the opportunity, and then we saw them close their positions. And so it's really something that you want to be kind of trying to force yourself to understand. And the only way that you're really going to be able to do that is kind of identifying with value, right? And that's why value is so important. If we assume that most or 68% of the trading was conducted in the previous day up in this range and we never traded back to that range, well, people that are forced to trade through margin, right, they don't actually have the capital in their account, which is a significant amount of traders, besides banks and institutional money, most hedge funds and leveraged funds and retail traders, professional traders are trading on margin. Well, they're going to be forced to trade or kind of forced out in a position like that. So that's kind of what we saw yesterday. So what we'll look for today as the day goes on and we're back towards this equilibrium of 68, right? This is that level that we've talked about for weeks and weeks and weeks that we were looking to trade. It's going to be kind of the break point here today, right? If we get some more selling, then we do have a couple references below, and then um, we also have some gaps below, a couple single prints down at 36, and then a big liquidity box down here from like 27 to 9. So that could be a target if they are able to get down there. You can see this last and this settle. These are just previous untouched last and settle. And so levels that I like to keep to see if they're going to get down there. Because if a move lower than this and a failure to get down to these and then back above 68 typically results in a retest of the previous day's settle. And so right now the play is looking like a play number one, right? If we want to see it come back up into value, we've got a nice ledge forming there. See it come up. And what I like to do, right, we pop out the profile and look to see, like, where's this impulse area from? Where's the breaking point from? And so we kind of see these rad prints that we call them, and then we can kind of see the impulse. We can kind of see where the impulse level is at, like where the move actually started. So we assume this mechanical reference, right, is just weak buying. But then the move really starts here. This doesn't even get to the previous bar's halfback. Right here, it kind of splits these distributions, right, from yesterday. And so this will be kind of our breaking point um, as far as where we want to get short. So it pops up, can't break that level. We want to look to get short and fade it back down towards that excess, towards that 68, which we know buyers are at, right? Um, Remember, yesterday was a -4 day, so we can play against the settle. Above the settle, we'll be very cautious because if we get above the settle, we want to assume that all of this inventory is stuck short, especially if we get above the settle intraday. Um, we're going to assume that most of this inventory is stuck short and could lead to a short covering rally and probably cause a little bit of a rise. And the target up there for these buyers is going to be back into this value, back up into the upper range of this balance because we're kind of in the lower distribution of this balance. You can kind of see it if I pull back over the daily real quick. We can kind of assume just because of how this range is going that we're in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12-day balance, right? Which isn't uncommon lately. We've been getting these larger balance areas. So we assume this is the balance. We can kind of assume this, split the difference here. You got the upper distribution of the balance, the lower distribution of the balance. So if we get back above that settle, we start to look for acceptance in that upper distribution. A lot of these people that are short, and mostly just these couple days here, because these guys are probably taken care of, are going to be looking to kind of cover those positions. And we don't want to get in front of a short covering rally. It can be a dangerous game. But that's the setup today. We'll see how the first 30 minutes form, right? Most likely we're going to get we could get a -4 period here. We'll kind of see how it sets up. But if we get a rally off the open, it'll kind of negate that +4 -4 from the first 30 minutes that we talked about yesterday, so it won't really be in play. And then also to remember today too is we've got a decent amount of news today, right? We have ISM manufacturing, PMI, and JOLTS job openings coming in at 10. We also have resources at 10, and at 10:15 we got vehicle sales, which shouldn't be that important, but this afternoon 1400 we have the FOMC minutes meetings, which are meeting minutes, which will be key to listen to, or to, well, be reading, but be key to read through to see what they say about possible rate cuts, because right now the market has been kind of pricing in these rate cuts, and we'll see. We'll see what they say, but we haven't really seen anything. The Fed has kind of been saying, oh, it's too early to talk about rate cuts, but we think that rate cuts are coming. So it'll be interesting to kind of see what the minutes say. We'll see what they say behind the closed doors, right? Remember, it's just a meeting just a recording of a meeting that they had. So, and it's stale data. So someone's already read it, I'm sure, and factored it in. But it's not really too much to take into account long term, but it is something to be aware of if you're in a trade come 1400 Eastern time. It'll probably be a little bit market mover. But other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. I will see you guys tomorrow.